back. Let us know whether you have a prediction, maybe like hashtag prediction or PRED, or hashtag plan, or hashtag ask, which I promised, and we will queue you up as we come around. In particular, I'm asking for the asks. We'll hold those to the end, but predictions and plans we'll just mix up as we go through the lineup here. So let us know, and hopefully my colleagues and if I can't keep track of the chat, they will let me know, and we'll call you up. We sorted through, as you know, if you were read last week, we did all our look aheads for the year and our roundups. We sorted through something like 250 briefs and thousands of deals. Thank you, Jessica and Rudy, and signals and features and podcasts. I also really want to thank the entire ImpactAlpha team, which has just been stellar this year. And as everybody knows, quite a year. But they came together beautifully every week. And in particular, I want to give a shout out to Isaac Silk, who produced something like 51 straight weekly podcasts on deadline between Thursday late and Friday early. And Isaac, a lot of folks have worked with you on the podcast. Thank you so much. Give us your prediction.
Thanks, David. Okay, I have a lot of predictions, but I've been told I can only give one. So my prediction for 2021 is that we're going to be hearing a lot more about geoengineering, specifically sun reflection and the ethical dilemmas around that, and also around public and private sort of funding and execution of those kinds of testing apparatuses or whatever, as we see carbon emissions increase from this year's drop.
Geoengineering from Isaac. You almost were a model. You went on about half again as long, because we're going to try to get through lots of folks. So we want you to think of it as a promo or a tease to get folks to be intrigued and to reach out and to connect with you afterwards. We're not going to exhaust, not that did exhaust the options, the opportunities there, but we're just to sort of set some expectations. We're not going to be able to get deep into it, but we're hoping to create some network effects and some connections between you all. I will drop my prediction in here. I think, and I will try to model it. So, electrify everything, or something like that, will become the rallying cry, signaling the tripling of demand and the crashing of costs for electricity, with spurring a network effect and network cycle on par with the telecom and dot-com boom and bubble of the 90s. So that's about what we're looking for from everybody. So put your notes in. We're going to go through it in maybe not quite the order, but something like the 5 buckets where we sorted the year out in the look aheads: emerging markets, catalytic capital, racial equity and justice, climate finance, and what I think we're going to start calling universal owners, public equities, ESG. But as John Lukamick reminded us on one of these calls a few months ago, we're all universal owners now. So those are the 5 buckets. I wanted to jump right in on community capital because it's so newsy with the relief and stimulus bill. I did see Beth Bafford pop in. Beth, are you unmuted?
I am. Hey, David.
Hey, Beth. You had a tweet that said the Congress has just created the biggest impact-linked fund in history, something to that effect. Tell us what happened briefly and what that means for 21.
Yeah, so the bill passed at whatever 11:45 p.m. last night. Whenever I got the New York Times alert, included a really important provision from the Jobs and Neighborhood Investment Act, which is an act that a piece of legislation that Senator Warner has been working on for months and months now, and that a lot of people on this call and kind of in our universe have been supporting for months now. That was essentially $12 billion that was split the split actually changed last minute, so I'm curious to hear the story behind that. But split $9 billion to the Treasury to create essentially an emergency capital fund that provides equity to CDFI and MDI banks, and then $3 billion to the CDFI fund to provide direct grants to CDFIs, split with different carve-outs and different timeframes, but essentially an additional $3 billion to the CDFI fund. That is the $9 billion. It will essentially be a fund managed by Treasury. The repayment of that is structured based on how much the financial institution increases their lending in low-income communities. So the dividends or the payments on that on those investments is tied to the increase in lending in communities, which is the kind of impact-linked return feature of this. It also has a lot of other bells and whistles. I think some that are going to be really interesting and helpful, some that may not be very helpful. And so, like everything passed by Congress, the devil's going to be in the details for how Treasury actually implements this. But I see Laurie on the line. I've been leaning on Laurie Spangler and George Surgeon and others who really have worked deep in the weeds of tier one capital investments in CDFI and MDI banks to really understand the usefulness of this program and how it's going to be implemented. But as an kind of evergreen student of community finance, I'm really interested to learn more, see how it rolls out, and see how kind of the second, third order policy implications of this kind of legislation down the line. So I'm really excited that it got into the legislation. Really hopeful that the folks implementing will be kind and flexible in what's needed. But that plus the PPP stuff that was also in the bill, it's going to provide for a very interesting year going forward.
Thanks, Beth. So the prediction is something like new tools for community capital. Watch this space for lots of activity. We've been watching Beth and colleagues. Beth's with Calvert, as folks know, and colleagues in the CDFI space all year, and it's really an example of this overnight sensation, 40 years in the making. It's now having its day.
Yeah, I would say that's the prediction is how do you in 1 year make up for 30 years of disinvestment? Prediction is hopefully
place it in prediction form. In 1 year, we make up for 30
years. The new administration will try to make up for 30 years of disinvestment in 1 year, and we'll see if they're successful.
Great. Well, thanks, Beth. We're going to be watching that very closely with you. Thank you. Worker ownership. Todd Leverett and Phil Reeves are from APIS. Are you here? Nobody knows quite what order they're being called in, so it's going to be a little bit of are you on mute? There you are.
Yep.
And again, thanks for playing. I know people haven't had much prep or much warning here, so everybody is on the spot. Todd, give us a prediction or a plan.
Well, to hammer everything looks like a nail, and the main problems and issues we try to deal with. So my hopeful prediction for 2021 is that first you will hear the term racial wealth gap being called by name by leaders from halls of local, state, federal government, by corporate CEOs, just permeating all through society, that actual term, and that solutions that are connected to expanding equity ownership of productive companies will become a go-to. And if you all at ImpactAlpha keep on publishing the things you guys are doing on employee ownership and getting the word out, I think that vision can definitely come true.
Fantastic. So can we reframe it to equity ownership, worker ownership becomes a major tool to bridge the racial wealth gap?
That's the tweet right there. That's the tweet. That's it.
Okay. So you see, you guys put it in the prediction form and lead with the solution. Those are the ImpactAlpha watchwords, as you well know. We have a new team member on the editorial team who's actually new and old. Rudy Senna had been our intern, left and got a training out in a very good shop of colleagues of ours, and now has come back. So welcome back, Rudy.
Thank you, David. Happy to be back.
You've got a prediction?
Yeah, I do. I think, well, I believe in 2021, we will see larger, more institutional ready, affordable workforce housing funds that have bigger social impact focuses. And, you know, this is a trend that I've been tracking this year. And the latest is the Turner Impact Multifamily Fund that just closed at $357 million. That fund was oversubscribed, although it's been a difficult fundraising environment this year. And so we're going to see larger funds in the new year, and fingers crossed.
Affordable housing as a stable asset class, especially in volatile times. Thank you, Rudy. I also asked, in the context of plans, some folks, some friends from Atlanta and Georgia to join us. I don't know whether Latricia and Don Ray, are you on?
Yes. Hi.
There you are. Hi, Latricia.
Hi. How are you?
What I wanted to see whether you would share. You know, a lot of folks are watching Georgia. Everybody else is going off on holidays, and Georgia is you know, staying the course through January 5th. Now, I don't want to put you on the spot politically or something, but is there a connection between the sort of civic mobilization underway and the kind of economic mobilization that Beth and others have been talking about? And just where does that go in 21? If you could offer some forecast, if not prediction.
Let's see if I can get it in your format. So I predict in the year ahead that this new, I guess, renewed energy and renewed understanding of the agency that's been created in this new election cycle, as well as hopefully an end to some apathy that I think could develop over time as it relates to trying to adjust policy and systems that create disparities here in Atlanta. So I predict in the new year that the same effort of mobilizing people will take hold as it relates to access to capital and addressing other barriers, including impact investing, to ensure that it's grounded in what's going to be impactful in the community, and that community is addressed through community wealth building strategies to address those concerns.
And you are, and folks should know, and the head of the Atlanta Wealth Building Initiative.
Yes.
Trying to make that happen. So
exactly, where we are focused on closing the racial wealth gap, to Todd's point.
There you go. There you go. Don Ray, I don't know whether you got to join.
Hi, yes, I'm here.
Oh, there you are. Welcome back.
Thank you.
You are also, I think you're also in Atlanta, right?
I am currently in Atlanta.
So give us the view of how the different strands of the mobilization, as it were, coming together.
Well, I'd say that Atlanta is on the national front right now. I've 23 years in Los Angeles. I'm an Atlanta native that's been in LA for 23 years and moved back home to acquire the mall I grew up in. But I've been getting calls from all over the country, from wealthy people, the Creative Artists Agency, about how they can help from a national perspective down here in Georgia. So Atlanta definitely has the attention of the nation. Hopefully we can have a turnout that was similar to the election. I'm optimistic based on signs and driving by polling places. I'm also concerned because I think the election will also activate the other side. So I do think that Atlanta is showing up. The tone is, I voted. I'm asking all my friends, have they voted? I'm calling my uncle who's, paralyzed from the waist down, offering to drive him to the polls. And he told me that he's already been to the polls. So I think that Georgia is active. So we shall see on January 5th. But my prediction for, I think, the economic tendencies of the near-term future is I'm having conversations with institutional investors about diversity at scale. So is that the moving the S in ESG from a small s to a large S?
Mm-hmm.
I think that that's the opportunity of a lifetime. And I believe that that's really going to be the focus, my focus, and should be others' focus in the next coming years. There is a pent-up demand in capital, and some people just can't do small things. So there is a person that we don't think very highly of, Donald Rumsfeld, who said, no one solves small problems. So if you want to solve a problem, make it bigger. It's become my life mantra. So I'm trying to create big problems and solve big problems. And I'd urge people on the phone to do the same.
Fantastic. I believe the mall that you're been working with is in an opportunity zone, if I recall.
It is in an opportunity zone. It's across from Morehouse and Spelman. So my pitch now is yes on opportunity zones, but also HBCU adjacency. If you see what Reed Hastings, CEO of Netflix, or Mackenzie Bezos Scott, or Scott Bezos, or has the grants and the investments that have gone into HBCUs. When we talk to people, we say that the investments in the HBCUs have to be mirrored by an investment in the community, or you're losing that energy that you create from that intellectual brain trust. Because when I graduate from Morehouse or Spelman or Clark or Howard, the community that that school is in, I do not want to stay there. So I am now educated and looking for a better life. So I do need some amenities and some quality of life. So I think, and it's working well, our HBCU adjacent pitch to maintain some of that energy and on-site intellectual capital is working quite well.
Great. Thank you, Don Ray, and thank you, Latrice. That's a good segue to a little bit of plans of ImpactAlpha's. Monique, are you with us?
Here.
There you are. Tell us tell folks a little bit. We've previewed it slightly. If you've been reading closely, you've got a few hints. But Monique has been working with us for about much of the last year, and we got some good stuff planned for 21.
Yeah. So further to what Donnery was talking about, there are some folks who have been ahead of the curve in many ways, thinking about some of these solutions, testing and incubating some of these ideas that now need to be 10x, as ImpactAlpha likes to say, and are ready for scaling up, are ready for some of that capital that hopefully will be coming this direction that Beth mentioned earlier at the top of the call. And so when we think about dealing with those systemic issues, there are some folks who have been part of the solution, who've been pounding the table, who've been living in a future before everyone else knew about it. We're hopeful that we would lift up some of those voices as part of a new podcast series that we're calling the Reconstruction. It does have echoes of thinking about historical parallels that we have today from what happened in the Reconstruction era of this country, but it's also beyond that because it's about agency and choice. And choices were made then that affect us now. And what are the choices we're going to make to reconstruct the next normal for all of us? And what are the hallmarks of this next normal? We are all hopeful that it is more just, that it's intersectional, that it is thinking about scaling, it's listening to communities, but we have to go beyond hope. We need to make actual choices. And there are people who are telling us how to do it. The due diligence pledge was interesting. That came out this week. Rachel Roberscati, Erica Seth-Davies, and some others, Tracy Gray, are pioneering these new ideas. And it's going to be, I think, related. My prediction is not so much a prediction, but a request, a choice that we should all make. We can hope that things will change, or we can do things differently. So I'm asking for accountability, that everyone asks for that, for the people who've pledged things, for people who've said that they were going to do things, that we hold folks accountable. And so that's not a hope. That is something that we must do and take action on. And hopefully part of the Reconstruction will be lift up the people who are doing the positive things, and part of the beat, we'll be hopefully finding those models that are doing it well, and maybe calling out those who said they were going to and are not. So we'll think about how to do that accordingly. And I'm now with the Investment Integration Project. And one of the things that we're talking about is making that small s a capital S too. So our most recent paper, I just posted it in the chat, is really thinking about what are these systemic risks that we have now been collectively made aware of post the pandemic, and what are we going to do about it? And how can asset owners and other kinds of investment managers and other intermediaries be part of the solution?
Great. Thank you, Monique. So you jumped the gun on the ask, but we'll file under ask for accountability.
Yes, sorry. I don't like to play by the rules.
Never gets you anywhere to play by the rules. Now, is Erica on? I don't know if she was going to be able to join or not, but she had a prediction, I thought. No? Okay. Much of what folks are talking about, for all the way from CDFIs to much of this relies on what has come to be called catalytic capital. We were working all year, as folks know, with the Catalytic Capital Consortium, or C3, and frankly, we're sponsored by them, in full disclosure. But we also learned quite a bit from them and about catalytic capital. And Dennis has got a prediction, I think.
Yep. Hello, everyone. Thanks, David. So I'm predicting in 2021, investors of catalytic capital will go from a few stalwart brand names, foundations, and DFIs, and frankly, a number of governments, to a movement of investors seeking to outperform on impact, if not financial returns. And here's why. Because in 2020, we witnessed a number of proof points in catalytic strategies, from community finance and its role in the recovery, to the vaccine platforms that had been seeded by Gates Foundation and others. Some of these decades in the making now solidifying themselves as solutions and markets in 2020. So blended finance, first loss tranches and funds, guarantees, bets on high-risk technologies, first-time fund managers can now be confidently deployed to the next set of challenges, including rebuilding local economies, taking on the racial wealth gap you mentioned, Todd, and taking the fight to climate. So we're looking for family offices and institutions and corporations clamoring to deploy catalytic capital to tackle challenges commercial investors won't touch.
There you go. Dennis, you were masterful at squeezing lots of predictions into one prediction. He
doesn't follow the rules either.
He doesn't follow the rules either. Emerging markets have been one of our main, if you've been tracking these calls, that's probably the biggest single topic we tackled this year, and in particular, small business. Jessica Pothering has taken that on as our reporter, and I think has a prediction, Jessica. Whoops.
Sorry, unmute. Yeah, my prediction is I think we're going to see a massive acceleration of small businesses that were previously really not on the radar to most folks, go through a digitization phase, and that's going to be a crucial entry point for small businesses and emerging economies to make it into the formal economy, and also for financial inclusion, which has been really the big issue that everybody has been trying to tackle. Like, how do we get more capital going to small business owners who need it, but who traditional lenders and financiers are unwilling to design and underwrite financial services for. And so we've seen, I'll try and keep it quick, but we've seen a lot of deals this year with startups that have come out with new products and services that are helping informal and small business owners manage their inventory, launch online businesses for the first time, and collect digital payments. And they're getting a massive amount of data that's ultimately going to feed into new financial products, I think, for these companies. And I remember seeing a handful of these deals, over the last couple of years, and thinking that they were a real novelty. And now I think post-pandemic, this is just going to become the norm, and it's going to be a huge opportunity, I think, for traditional financiers to figure out how to be more inclusive for the small and micro business sector. Yeah.
we've been working with the Collaborative for Frontier Finance and the Visa Foundation on this coverage in particular, both of which are keyed in on the small and growing business sector. And I think Drew Von Glahn and Lori Spangler wears many hats, including the CDFI one that Beth called out, but she also has been working with Collaborative for Frontier Finance. Drew and Lori, are you with us?
That sounded like a very broad way of asking that question, but yes, we're here.
Well, give us a succinct prediction, Drew, about the state of small business finance in emerging markets.
So to frame it, if 2020 was the year of painful discovery, which it really was for everybody about what's really out there and what's working and not working and the systemic problems we have, I think I'm looking at 2021 of being the year of leaning in. And what I mean by that is just as the discussion on the domestic side has been about 30 years of making up for underinvestment, I think we have at least 4 years and another 29 days of complete underinvestment of the leadership of the US government and agencies in the international development. So my prediction is we're going to see much greater alignment out of the US government that is crucial for many of these markets to move forward in the way Jessica was just describing a minute ago. So my prediction is greater leaning in by the agencies and entities within the US government that can be very transformative and very catalytic with their capital in the developing markets.
So things are ready to go, some leadership, some catalyzation, as we say, and off we go. Lori, do you want to add something to that?
I'll just add two things more in the spirit of plan. One, lifting from the CDFI point, as Beth alluded to, I think there is receptivity between policy and action, but the rules are critical here. And that CDFI announcement yesterday, if you read deeply in what the Treasury is suggesting, there are some impediments there that will actually frustrate the purpose. So we've really got to be on it as a community to ensure that the rules work. So the plans have to look at the implementation rules. And on the small and growing business, it's on the who. I mean, we all throw around these references to small businesses, but it's all about who is being served. So action and accountability, I double click on Monique, and let's make sure we're honest and clear about who is actually receiving the capital and who is not, and push to ensure that we're expanding, not just retrenching.
You can see, thank you, Lori and Drew, you can see a little bit of ImpactAlpha's method here as we rely on the very smart people all around us. So to bring them to you. So you think we're smart, but in fact, all of you are the ones who are smart. So thank you for that. Let's turn to climate. Climate is getting the most, I would say, play right now as the climate action, as the thing that the disruption has really illuminated, and the area where some of these exponential trends. You're hearing a lot of optimism, I think, here, but where these exponential trends are actually already starting to bite. I want to bring in Mark Campanelli, who I think has joined, but I can't.
Hi.
There you are.
Hi.
I can only see so many screens at once, and I can't see you. But hi, Mark. And you've been one of our great teachers in this disruptive shift. So give us a prediction, and you can even have two if you want, if they're short.
Well, I'll get the quick short one out first. I
Okay.
think with Yellen at the Fed, or whichever part of it she's running, I think we're gonna see a carbon price discussion, which will be international, which will involve Europe, maybe China, and the US. That's a short one. The big one is those who've been following the trends in renewable energy investment. This is definitely growing exponentially. All the forecasts which have come out from the IEA have been broken, and they will continue to break over the next few years. But dealing with climate, we need to use both sides of the scissors. So we need to grow renewables, but we also need to cut back on fossil fuels. So my prediction is I'm pasting those of you that missed Kamala Harris's policy idea. We're going to see the discussion of a managed decline of global fossil fuel production. And the way we're going to do it is we're going to do it through what we're calling a fossil fuel non-proliferation treaty. And last week, the Danish government, which is Europe's biggest producer of oil and gas, announced a complete ban on all new oil and gas exploration licenses. And we're going to see them followed by other governments, whether it's the Irish government or other parts of the world. And we're going to open this discussion internationally for a treaty. And I think it gives us a chance really to allow every country, every corporation to sit down and hold roundtable discussions, and we're going to see that push forward. I just put a little thing in the chat box about why we're going to need a fossil fuel non-proliferation treaty. We're going to see this discussion grow, certainly as we lead into the Conference of the Parties, which will take place in Glasgow next year in the United Kingdom, with the United Kingdom as host, where all governments, international governments committed to the Paris Climate Agreement will attend, and civil society, particularly from the global south, will be pushing forward this idea of a treaty. That's my prediction. Thank you very much.
Okay, let me just flag two things there that actually three things. The first is that the short form would be a fossil fuels non-proliferation treaty that drives a managed decline of the fossil fuel industry. Yeah. But the other one I wanted to flag that you sort of glanced over, that in fact the projections for renewables, and solar in particular, have generally and consistently outstripped even the best case scenarios and predictions of the supposed experts like the IEA, right? The International Energy Agency.
Yeah.
So this is a warning on the other side that you can also, your predictions can be too cautious as well as too grandiose. So don't err on the side of over cautiousness either.
But
right,
caution is access to capital is still going to be an issue. There's loads of really exciting renewable energy projects around the world, but institutional investors have not really properly formally allocated or announced mandates to allocate. So that's going to have to shift in the next few years if we're really to achieve these Paris-aligned goals. We need a complete deployment, especially in the global south, Africa and Asia.
There you go. And that's a good segue to Amy, Amy Cortez on our staff, who's been covering a lot of this with a lot of your help. Mark, thank you. Amy, what's your prediction?
Yeah, and so I'm going to err on the side of not being conservative and perhaps go out on a limb here. But my prediction is that 2021 is when we're, Mark, really going to see climate finance really take off. And I'm going to say, put a stake in the ground and say it's going to hit 1 trillion in 2021. Now, that would be a big jump. It's been more or less around 600 billion for the past few years. In fact, I think it peaked in 2017 and has been sort of, bumping around that level ever since. And one note there, right, with the declining renewable energy costs that Mark mentions, your 600 billion buys more, but we're still nowhere near the mass mobilization of capital that we need to stave off the worst of the climate crisis. So I think the forces are aligning this year between government action, including the Biden administration in the US, the energy economics that Mark mentioned and David mentioned, and also investor demand. And it's funny, you have people like Ray Dalio and Mark Carney and David Blood of Generation calling this the biggest economic opportunity in our lifetime, this transition to a low carbon economy. So to date, we have not caught up with that opportunity in terms of financing, but I think this is the year that happens and that climate action goes exponential.
There you go. And that's a good segue to Dave Chen. Dave, are you with us? Dave, as folks know, has been helping us kind of chart the path, what we're calling this institutional shift. Dave's with Equilibrium Capital and has his finger on the pulse of some of these pension funds and other big institutions. Dave, are you on? Maybe not. or maybe he, okay, well, you can get some of Dave's predictions actually on the latest podcast, which goes through this and is frankly in line with a lot of what's been talking about, in particular, the sort of operationalization of sustainability and even the rewarding of that in capital markets by as companies shift their revenue streams towards sustainable solutions. So that gets now not to be off on some only ESG kind of thing, but actually driving the core of corporate strategies, I think is what Dave was going to say. Anyway, you can hear it from him on the podcast itself, which you can find on the site. Well, we're remarkably on track, which I really didn't expect. I told you a little bit about plans, and I want to now come back to the university students that I mentioned. We did not plan this, but if any of you want to pop up and offer any kind of account, I shall say, not necessarily testimonial, but account of how ImpactAlpha shows up in your programs or in your library or in your classes, I'd welcome that. But what the plan that we're having, I want to, Zulema, do you want me to do it, or do you want to tell folks about the university plans?
Go for it.
Okay, so as you know, we offer the many faculty in finance tell us that the sustainability courses at the MBA programs are the ones that are most oversubscribed, and they are using ImpactAlpha in many cases as required reading or recommended reading. And to give the students access, we have arrangements with dozens of universities who have site licenses to give students access to ImpactAlpha, which I think is one reason why we have so many students on these calls. And what we want is to turn those dozens into hundreds. So the project for students is to become the evangelists and ambassadors of ImpactAlpha at your universities. If your library doesn't have a site license, we want you to march down there and demand, what do we want? ImpactAlpha. When do we want it? Now. So if you want to flag yourself in the chat line or just drop us a line at info@impactalpha.com, Zulema and the team will get you set up with all the materials you need to take to the librarian and get that going. So did any students want to pipe up here and tell us about education in pandemic and where Impact's gonna go in 21 in their schools? All right, I put them on the spot. I should have prepped that a little better. We're going to have a call with students featured in the new year, so stay tuned for that. All right, well, we're at almost the quarter hour till mark, and we've got some time for genuine Q&A. Team, who has been piping up with something to say in the text, and who should we call out now to?
Erica's here. You called her before, but
Erica.
Hi. I'm not sure what the discussion.
There you are, Erica Davies.
Hi, I was I'm late to the call, so I'm not sure what the discussion was, but it sounds like predictions for 2021. And I will say one that I'm hoping comes true is that there's greater accountability for racial equity in this space. That we saw a lot of statements in 2020, and I'd like to see, and I hope that there is, again, more accountability, not just for the movement of capital outside of organizations, but also how firms, how organizations are actually holding themselves accountable for internal progress on these issues, such that it sticks.
Well, you might have missed Monique's comment, but you were channeling the same thought. So I see why you two like working together.
I'm hoping so.
We're pretty much the same person, so.
Been the same person for a few years. Yeah. So that's the what I'm seeing, and based on sort of the averages, at least that I'm getting these days, that there is more movement in that direction. So that there's, considering policy, considering internal practices, and again, what does accountability meaning? Accountability to whom? It's starting to surface a lot more than I think I've seen in previous years. So.
Yeah. I think that's on tap, and One thing we do like about these pledges, I know people sometimes think they're, empty rhetoric, but it does allow you to hold people accountable to something.
That's right.
So it gives you a place to start asking the questions at least.
David, it looks like Lauren from One Planet Ventures has an emerging markets prediction.
Good.
She's still on.
Lauren?
Well, hi, I've changed to Emerald Peak because actually I have jumped into my commitment for next year, which is about making sure there is growth equity in emerging markets, particularly underserved ones. And I'm going to call it impact private equity, because we know private equity has some not necessarily constructive undertones in the US, but if private equity is about creating financial value, impact private equity, it's going to be about creating financial value and impact. Not just we're focused on Central America and underserved markets in Latin America, but I see this trend around the world, whether we call it impact private equity or something else. Impact capital can't be 100% debt. That's the takeaway from the global financial crisis. So I'm bringing the equity to the table, and anyone else who is working on that, please feel free to get in touch with me.
Great. Lauren, your name on the screen just says Lauren, so remind us your last name now.
Burnhill, sorry, when I changed.
Yeah, there you go. Just so folks can find you.
Name.
Just so folks can find you.
I'll put an email in the chat box for Emerald Peak.
Great. Others, Dennis, queued up?
Not specifically. So anyone who has a prediction or plan or ask, feel free to jump in.
Mark, you got a few more for us, Campanelli?
Few more on climate.
How many tens of billions of write-downs of stranded assets? You're the father of stranded assets.
No, this is interesting. We've spent a lot of time thinking about this. We think there's something like 20 to 30 trillion dollars of fixed fossil fuel assets, pipelines, oil rigs, mines, all the shipping that carries the LNG and the petroleum products around the world. A lot of that's going to have to get written down over the next 2 decades if we're serious about achieving the Paris goals. And from our discussions with the central bankers, no one is doing any detailed evaluation on that. The accountancy firms are starting to look at it. I think this is going to be a trend for the next 5-6 years. So at Carbon Tracker, we've been publishing our work, which you've been covering, thank you, on what we're calling early retirement obligations, which is the costs of retiring, particularly US oil and gas wells. So the companies, the shareholders are putting aside, say, $10,000 an oil well as a provision for cleanup. It's coming in they're typically coming in at about $300,000 each. Now multiply that by the number of oil wells the US has, you can see just how big a problem it is. Make that global, put it out in the North Sea, around Mexico, around Africa. It's a vast, vast issue. And the central banks haven't really got their heads around the significance of these potential write-downs. We reckon about a third of global debt, fixed income, is outstanding to oil and gas. A good example of this, you saw Chevron raise $6 billion a few months ago on a 30-year bond. Is Chevron really going to be around in 30 years' time? Anyway, fixed income guys can figure that one out. Once you've added all up, that's also in the tens of trillions of dollars. And that's stuck with the insurance companies, with the pension funds, with the banks, people's pension plans. And we've got to find a way of unraveling all of that in the next decade or two without creating any financial instability or any social dislocation. So good luck with that task.
There you go. So I asked about tens of billions and Mark gave us back tens of trillions. And that's another indicator of this.
We've published this on Carbon Tracker's website. I think it's called The Decline and Fall of the Fossil Fuel System. So you can get your head around the numbers on that one.
There you go. There you go.
David, a few more predictions in the comment section, and I'd like to invite Ibrahim Rashid or Craig Zillizer on both pay for success models and blockchain. So feel free to hop in. We'd love to hear more on those.
This is Craig Zelzer from Medellin, Colombia, from PCN. So thanks for the call. I have 2 predictions. So one, in the angel investing space, I'm seeing it's still like 5% of all deals, but blockchain actually having real applications. And so one startup, we did a small investment in that Mercy Corps had a big investment is called Valio, which is using blockchain to do remittances for Venezuelan migrants back to Venezuela. And then just one thing I'd love to hear, some things, we do a lot of work on the future of work. And so I'd love to hear if anybody has predictions on the gigification of economy, because it's going to be increasingly gigified, and what type of new social contract or policies are going to emerge, because it's going to be a mess.
Just on blockchain, I will say we're seeing the same thing, and blockchain is one of these examples from my tech days. You know, people know the adoption curve of the hype cycle of technologies, and blockchain certainly climbed it at one point, and then there was sort of a backlash, and then there's always this what they call the slope of enlightenment, as a technology actually finds real and practical uses, and I think blockchain is climbing the slope of enlightenment right now.
Ibrahim, jump in.
Hi, can everyone hear me?
Yes.
Yeah.
Cool. Hi. So I have both a prediction as well as an ask. First, I'm Ibrahim Rashid. I'm a public policy student at the University of Chicago. My prediction for 2021 is that results-based financing and pay for success is going to be like a bigger tool that policymakers in the private sector will do to decide, which government projects we want to fund. Social finance just put out their interim results with JVS and I think the Massachusetts pension system on a workforce development program in Boston, trying to help refugees and new Americans find work. And that social impact bond, that RCT found that like people who participated in that program that was scaled with private money was able to like significantly like increase earnings for all of like the refugees and immigrants, I think by like $3,000, which is like an amazing amount of like money and like impact shown by like an RCT. And I think the reason why like I think social impact bonds will be a bigger thing in the upcoming years, that COVID-19 has really decimated state budgets. So policymakers will be really pressed to decide which projects are they going to fund, and will it actually make an impact. And pay for success is just a really cool model that puts all of that risk of experimentation and policymaking away from government into the private sector. So I feel like policymakers would be like, okay, we have so little money, let's just let's do these social impact bonds to see what works, and then whatever works, let's just scale it. So I feel like in this resource constrained environment, social finance will be really cool. Even in international development, I know like the ICRC is trying to do similar things with hospitals and conflict zones. So that's my main prediction for the new year, especially with COVID. In terms of the ask, so as I mentioned, I'm a public policy student, and I'm trying to like make a very hard pivot into like this impact investing space. I'm trying to start like an impact investing club at the University of Chicago. I'm doing the Kellogg Morgan Stanley Challenge, and like I just finished up a fellowship with a donor advised fund, trying to like help them do some impact investing. So I personally would love to connect with folks in this space who want to offer mentorship to like a really eager kid who wants to try to get into this space. So looking forward to meeting some folks here, as well as inviting some folks to hop on a Zoom call with University of Chicago students who want to talk about like the policy challenges and how regulation can be changed to encourage impact investing as well as mitigate impact washing. So my prediction is more results-based financing, and my two asks are mentors as well as looking for folks who want to talk to students about policy and sustainable finance. Thank you.
Excellent. That's actually a good segue to asks, because I did put that in there intentionally, because often you're like not supposed to do asks, right? But everybody really wants to do an ask. And so they're sort of trying to figure out how to do an ask without, appearing to do an ask. So here, the ImpactAlpha, network of agents of impact is a tremendous resource. So if you want to, and I see a lot of folks are adding to the text in the chat, but if you want to pop up here and ask for what you need, now would be the time.
I'll jump if no one else will. It's Dave Rankin. I'm out of Chicago. I run a small asset firm called Great Lakes Protection Fund. A couple of asks. It's an exciting year, but let's get impact right, not just aspiration, but let's think about what we really want to do. And in that spirit, as I said in the chat, let's focus on movement, not motion. And as someone said earlier, expansion in progress, not retrenchment. It's going to be a reversion to mean temptation this year. So those are my asks, guys. Thanks.
Get impact right, accountability. What else have we heard?
If you're asking me, I'll just keep talking.
If you've got another one, or if anybody else wants to pipe
Yeah,
in
it's
as
just,
well.
let's watch the reversion to mean. A lot of excitement out of this relief bill. It's really not a stimulus bill; it's a relief bill.
Yeah.
And that much energy sloshing around can pull us back toward the mean. We got to move forward.
Yeah, yeah. I mean, just from ImpactAlpha's point of view, we've kind of been beating the drum all year. We started with this 10x challenge, I think that Monique mentioned. We moved to Impact On, this little notion we have that folks are need to tune their portfolios to impact in a proactive kind of way. We sometimes talk about going from the hedge, which a lot of people are doing, to the bet, that's the future we're going to get to. It's a lot of that kind of same thinking, Mark.
I've got to ask.
There you go.
So my name's Matt McCrary. I'm from Chicago. I'm actually going to Cambridge for my MBA starting in September. That said, I currently work at a private credit firm in Chicago. Also have some private equity experience. However, I'm trying to transition into impact investing. That said, I'm interested in an internship this summer. So if there's any folks on the call who would be willing to take someone who has, call it 6 years of private credit, private equity experience to do a pre-MBA internship, I'd be more than happy to connect. I would actually very much welcome it. So I'll put my Gmail in the chat, and if anyone is interested, would love to connect.
Perfect. That's exactly what I was looking for. It's exactly the way that talent will get noticed and recognized and nurtured along. So thank you. We got like 3 minutes. So, when are you else going to have a chance to ask this crowd of people for what you need in 2021?
All right. So I have an ask. I read Ronnie Cohen's book, which most recent book on impact, which made an argument that disclosure is hyper important. And I'm both a former investment banker and former practicing lawyer a long time ago, and think I might want to focus on trying to do something productive in that area. So my ask is, who else is working on this and would like to collaborate?
Is your email or contact info in the chat?
KimLeslieSchaefer@gmail.com. So
okay.
As long as you spell Schaefer correctly, you're in good shape.
Terrific. I will say that in our survey, slightly surprising to us, the most popular topics were impact management and measurement. It does seem to be both what people want to know, and also I do think what impact investing can offer to the broader financial markets is all the brain damage that's gone into impact management and measurement over the years. So
there are a few lingering predictions as well, if we've run out of asks, but folks with predictions jump in as well.
You want to call some out that, or I know there's a lot in the text.
Yeah, go ahead.
Hi, it's Sari Miller.
Ah, Sari, how are you?
Okay, great. David wrote an amazing article about me a couple of years ago when I still keep a pretty low profile, but people refer to his article still to this day about impact investing. And I've been, my first impact investment was back in 2008 for Leapfrog Investments, which I backed Andy Cooper, who had no finance, no for-profit, and no fund experience. And today, 11 years later, we have $1.6 billion under management. Now, when I'm actually responding to your impact measurement, and I am a founding investor in netpurpose.com,
right.
And Sam Duncan, who was head of impact at Leapfrog Investments, I guess we first closed out the first round in January, and we just closed out a well oversubscribed round last month. And so there's tremendous interest in measurement. And I think probably Europe will lead the day where they will require impact reporting as part of annual reports. And hopefully in the next few years, the US will come to the forefront of that as well. And they do deep dive analytics right now only on public companies, but they're expanding. But what they do that's probably unique is they're able to ingest PDFs to actually get a much in-depth and then broad view of what ESG is and the impacts on different companies and different portfolios.
Great, Sarah. I think if you just want to phrase it as a prediction that management and measurement will both be more important in corporate and company strategies, also more important in, as you say, in policy and regulations as well, with Europe leading the charge on that. So I think they're well positioned. Andy's been a podcast guest, and we know Samantha as well. So they've obviously done their homework.
Well said.
I have one more prediction. We had so many this year that we covered, but one really important thing that happened, which I think has portent for the year ahead, was the Heron Foundation, right, which has been a pioneer in aligning all of its investments with its mission. This year said that it would share or give control to community members to make decisions about its investments. So it's putting decision-making into the hands of community leaders. So I'm looking forward to seeing if more people follow that lead, since they have been such a trendsetter. And I think that would be a good trend.
Distributing power as well as capital, maybe, is the short form. All right, well, that is the top of the hour. What we've done in recent calls is, let folks go, obviously, who have to jump to other things, but we'll just leave this Zoom room open for a few minutes if folks want to just hang out. It's always a little awkward to make the transition here, but I'm going to try to butt myself out. And if it's just about putting more contact info into the chat or chiming up. I know we've been recording. Sometimes we turn the camera off, and that lets people talk more freely. There is not really any such thing as off the record, I'm sorry to say, but so anyway, we want